Good morning. This is Manav Patel with IMTF Trade. Today is July 8th, 2019. This is our market update. We haven't done a market update for a while. There's not much that's been going on, just back and forth. Our levels have been there, so there's nothing exciting to be reporting. But also, it's also summer going forward. So anyways, let's get to the market update. As you guys know from our market update, we look at two different products to judge the U.S. markets. One is the VIX, which is the volatility index. It's an inverse relationship to the stock market. That means if the VIX is going up, then the stock market's going down and vice versa. And we'll then look at the E-mini S&P 500 futures, and then we may look at some other countries around the world too for market update. Anyways, here's the VIX here on the weekly time frame. These are the levels we've marked off for years. You could see here, and you could see from this here is that this is the resistance right there. There's a support here. These are two different zones here. So when you're in the bottom zone here, we're basically saying the market's in a bullish mode. When you're in the top zone here, this is when the markets basically are in a bearish zone. The closer you are to this middle here, that basically means you're consolidating. So right now, if you look at it here, we're in a bottom zone here, so we are bullish, and since we're towards the support, we're bullish trending down to that support right there. And you could see we're just swinging back and forth here. Basically April 15th here, we hit that support right there. At that point, basically with the bullish trend had a high probability to eventually to sit there and top out, and to sit there and start to go, the markets would start to go down, and we're looking for them to go down to this resistance or level right there. And that's kind of what happened right there. So we got to that level here, right there, a couple of times here, and then but we never have followed through in going down to the support here until this week here. You could see here basically on June 3rd we hit that resistance there, and then basically June 10th we followed through. And you could see now we got a high probability of getting down back to the support at 11.5. So basically are going to be bullish until we get to that level right there. Let's go look at the E-mini S&P 500 futures. Here's the E-mini S&P 500 futures, and you could see that basically last week, this is the weekly time frame. Last week, basically, we did register a new all-time high, and we registered it because we closed above this level here for the first time. And we kind of dingled around a little here, but not much. But this was right there, and you could see that black cross right there, which is a multiple time frame support, which helped that across the board. So you could see here that we are going higher. The question is, how high are we going? There's no history in the past to sit there and determine that. However, you could look at Fibonacci ratios, which I'll show you real fast, where you could go to do that. So the next Fibonacci ratio you have pretty much is going to be at this level here, which is roughly about right there, 127 right there. Okay, now with Fibonacci, this is very subjective. Reason why is we draw from here to here. You could have also sat there and draw without the wick, which a lot of people do. And this is the thing I hate about Fibonacci, is it gets subjective, and you have to start looking at Fibonacci clustering and all this stuff. So you could see another zone right there. We'll just put it a little lower here based on this right there. So this is the target we're looking at right there. However, I'm not really going to pay attention to that. Really going to look at the signs below. To me, the VIX is still not a support, so that means we still have some more upside. When the VIX gets to that support, then we know that maybe this market's getting a little top heavy here. Let's go look at the daily time frame real fast. And I'm just going to enlarge this here so you guys could see it. And you could see here, you can't see these yellow dots here, but the key thing is that once we start making these all-time highs here, we had a medium overextension. And kind of due to that overextension, we're going for a little pullback here. There's high probability that we probably will sit there at least pull back to the same resistance that we broke here at 29.59. When we get there, it's going to be very critical for us to see what's going on here. If this holds here, then we got a high probability we're going to sit there and keep on going up. If it doesn't hold here, we have a high probability we're going to sink into our consolidation pattern for the rest of the summer. The VIX is telling us that basically we're going to sit there and hold here if we do get there based on what we see, but we'll have to wait and see what's going on. But we'll wait and see at that point. Okay, let's quickly look at some other markets. This is gold on a monthly time frame. I want to show you this. Reason why is we pretty much entered a consolidation pattern back in 2003 in gold, and we're kind of here. And we kind of last month broke out of that consolidation pattern here by breaking that resistance at 1367. Doesn't mean we're going to start a bullish trend at all, because you could see here a couple of times here we did break the support here but never follow through. However, this is looking ugly right now, and really based on momentum and everything, we still don't have that follow through at all. Okay, so just be careful there. If you look at the weekly time frame here, you could see that we're extremely overextended here. So the key is for us to kind of pull back to this level here and then kind of sit there and hold it and then go up. If we do, then we know we could start a trend. If this thing starts to go up here, that means volatility is still there, and it may not start a trend. It may just sit there and enter a consolidation phase. Let's talk about crude oil now. Crude oil is an interesting guy. Reason why, as you can see here on the weekly time frame here, we're not above the cloud based on Ichimoku's sediments, not bullish, and we keep on holding this cloud here, as you could see over and over and over, which is not a good sign at all. So we're in a bearish consolidation pattern long term. You could see here we held the cloud here, we held it at this multiple time frame cross right there, which is a resistance there. And now we're kind of stuck at this multiple time frame support right there. So we're basically consolidating on a weekly time frame, basically between 57.17 and 60.18. Until we break that levels, we're really not going to know exactly which way this thing's going to go. Every time it's trying to go bullish, it's basically being knocked down. It still has a high probability, believe it or not, to go down more than up. Reason why it's below the cloud and just keeps on trying to go down here. Okay, so it's going to be interesting to see exactly where it goes, but if it does break that support, next level is going to be roughly around 54.53. So we're going to wait and see exactly what happens there. If you guys have any questions, you could contact us here at info@eiicapital.com. Have a good day and good luck trading.